What if one decision could significantly boost the Indian economy? Picture this, a vibrant, bustling economy pulsating with potential. Yet it's currently a tale of untapped opportunity. Only 0.3% of the Indian population contributes to 76% of the tax revenue, a minuscule fraction bearing the brunt of the nation's fiscal responsibilities, while the vast majority remains on the sidelines. This imbalance limits government spending, placing a strain on public services and infrastructure, and stifling the full potential of this dynamic economy. The Indian economy is like a sleeping giant. It's teeming with potential, yet shackled by the chains of limited fiscal participation. This is a narrative that needs to change. A higher tax base would mean a stronger, more resilient economy. Imagine what could be achieved if more of the population participated in the tax payment system. The possibilities are staggering and the potential astronomical. How does India's tax participation compare to that of developed countries? Let's dive in. India's tax participation rate is considerably low when compared to developed countries. Currently, only 0.3% of the Indian population accounts for a staggering 76% of the tax payment. Contrast this with developed nations where a significantly higher percentage of the population contributes to the tax system. In countries like the United States, Germany, and Japan, for instance, the tax participation rate is much higher, resulting in a more balanced distribution of wealth and economic responsibility. This high tax participation rate reaps several benefits. It allows for more government spending, leading to better public services. These services range from high-quality education, healthcare, and robust infrastructure, to name a few. A high tax participation rate also leads to a more robust economy. When the government has more resources at its disposal, it can invest in various sectors, fueling productivity and growth. This, in turn, results in higher profits for companies and a rise in stock prices. The stark contrast between India and developed countries in terms of tax participation serves as a wake-up call. The potential for growth in India is enormous if more of the population participates in the tax payment system. It's an opportunity waiting to be harnessed and one that promises a prosperous future for the Indian economy. What could be the impact of increased tax participation on the Indian economy? Let's delve into this. Imagine the potential benefits of more citizens contributing their share. This would dramatically boost government revenue, providing substantial funds for public services and infrastructure. A broader tax base would allow the government to invest more in education, healthcare, transportation, among others, sprucing up the quality of life. Furthermore, a robust and resilient economy could be crafted from this increased revenue. It would provide the government with a buffer during economic downturns and the ability to stimulate growth during booms. And here's where it gets interesting for investors. This financial buoyancy could lead to higher profits for companies and a surge in stock prices, making India an increasingly attractive investment destination. The Indian economy, already a promising tiger, could roar even louder with an expanded tax base. The future of the Indian economy could be dramatically transformed with increased tax participation. So, what does this mean for you as a global investor? It's a golden opportunity. As India stands on the brink of a tax revolution, early investment could provide substantial returns. Imagine the prosperity when a larger percentage of the population contributes to the tax system, similar to developed nations. This surge in government funds will stimulate spending, boost productivity, and ultimately enhance corporate profits and stock prices. Invest in India today and be a part of this transformation. The future of the Indian economy is in your hands.